see where it is it's reaching for. Now, step one is you have to know what the higher time frame draw is. Where is it reaching for on a higher time frame chart? It doesn't have to be the weekly chart. I just prefer to teach my students to focus there. But if it's not clear, then you must at least, at the very minimum, have some idea on a daily chart. What is it reaching for? This morning, and this is June 23rd, 2023, in case you've signed on to another, I'm assuming it's a YouTuber or someone else, because I don't put these Twitter spaces anywhere on my YouTube channel. So a lot of students, they'll record them and put them on their mediums for other people to listen to, and it's fine. I have no problem with that. Today, Friday, June 23rd, 2023, in the morning session, I sent out a tweet showing you the daily charts for both ES and NASDAQ. And I said that I favored the lower fair value gap. The ES had one above, and then the lower one. Obviously, we have been focusing on the NASDAQ as the upside leadership index. So if we're looking for shorts, which one would be more likely to deliver to its target? The NASDAQ or ES? ES. Because it's not done what? It has not provided a way of keeping up with NASDAQ on the upside. So it's been a laggard. So when it becomes time for a market to sell off or look for discount or raise when it's bearish, which market's going to be easier? See, you're thinking already, well, the one that's gone up more, it has more room to come down. So therefore, that's the one to sell short. No. That's the one that's going to be more reluctant to go down because it's the relative strength leader on the upside. So we want to focus on the index or Forex pair that's the weaker one. So having a higher time frame draw, that's that daily fair value gap on ES. And if you look at your daily chart, mark that out in your daily chart, you'll see that we actually did go into that by one tick, but that's still going there. NASDAQ was unable to do that. There was a large opening range gap. Both ES and NASDAQ had that today. We were able to see it trade softer, and you watched me execute. I shared that today. I actually put a trade in both of ES and NASDAQ, and I showed you what I was looking at real time and how I nixed, canceled, closed in profit the ES short because it wasn't showing the willingness to want to reach down like the NASDAQ did. So in the morning session, it offered opportunity to see expansion lower on NASDAQ, even though it failed to get into its daily fair value gap. So when you're looking for trades to hold on to and you want to catch a runner, you have to know what you're trying to reach for. And also, you have to also know where is this market indicating that it's not willing to do so. I showed you that today. I've never showed both markets side by side, real time, showing the executions, managing the positions, and then closing it because of some reason that was showing me in the charts. The NASDAQ was willing to open up. It had better market structure. It was respecting its premium arrays, and ES was it was rangy, and it was wanting to come back too much on its retracements. So if it's becoming a less likely scenario that the market you're in is going to be a runner, don't hold on to the trade just because you want it to become a runner. It's going to be telling you something all the time. It's either going to be a hold, or it's probably time to take a large portion of the trade off in the partial and then still weigh it out. If you don't feel confident even after that, meaning you have to take a sizable amount of the trade off. See, you want to hold on for the full position, a full pull. A full pull is entry whatever that size is, and then you place your stop, and then it goes to the target you've predetermined, and that's it. You've taken no partials. That's called a full pull. I've seen many traders talk a good game. A lot of pseudo mentors out there, they'll say that bullshit. It doesn't make any sense to take partials, but you don't see them executing shit. You don't see them doing anything, but they got a lot of chatter. I teach you how to take partials because you won't know how to do that initially. Just like you won't know how to hold on to a trade for a large, big, profitable runner. That has to be something that you desensitize yourself by trusting all the factors that you're doing for higher time frame trading. If you're looking at a 3-minute, 2-minute, 5-minute, 1-minute chart, and you're trying to come to the conclusion that you're going to hold for 100 handles, it's going to be very, very difficult to do that without a higher time frame of reference. Like, you have to know what it's potentially reaching for. Because if you don't have that frame of mind when you're in your trading charts, whether you've annotated them or not, you have to at least know what it's likely to do. You can't look at a pivot number. You can't look at a standard deviation that comes from my work. You can't look at a Fibonacci extension and think that that's all there is. Those things are small little cogs, small little components to the larger whole. And if you blend those types of things with something that's on a higher time frame that would be used for the purpose of liquidity or repricing to an inefficiency in price, fair value gap, something to that effect, and those pivots, Fibonacci extensions, those things start to converge around that idea, then you have a better, narrative to hold on to. There's got to be a storyline that you can trust, because you just can't go out there and buy a market, think it's going to go up 100 handles because you want it to. There may be something up there that you can make a case for, but is it one thing that you're making the case around that makes it feasible for you to trust that it might go 100 handles? Because your subconscious is really talking to you if you're uncertain. You're probably really just saying, I really want this to be a big runner because I want to be able to show the world. I want to be able to show my spouse. I just want to look in the mirror and say, I did it. And there isn't really enough evidence behind the idea of it going that far. So in the beginning stages, you have to wrestle through. I did. When you see me out here, I'm trading 100 handles, 80 handles, 70 handles, all these, they're not huge runs, but they're not 5 and 20 handles either. The way I get to that point is what I'm showing you. I take partials off at logical levels. I don't need to take the partials off, but I do it so that way you see by example. Because everybody, when they learn from someone, they talk like the person they learn from. They wear their clothes, the types of things that they do. They pattern themselves. They emulate them. Well, I know that as a mentor, and I have an influence over you as a student. So I'm teaching you by example. I teach by example with a demo, so that way you're not embarrassed to do it. And also I teach you to take partials, because until you see how it works, and then you weigh it against what you've been trying to do and not being consistent with it, it's easier for you to say, you know what, I'm going to let go of what I thought I should be doing, and I see him doing this, so I'm going to try that. And when you take those partials off, which is the secret, that's the secret to holding big ass runners. You're not doing a full pull, okay? Nobody just walks out there and starts doing that. It takes time conditioning yourself. So if you know that that's where you want to go in your trading, that doesn't mean every day you're getting 100 handles. It doesn't mean that. It just means that when the market is offering it to you on a silver platter, here's what it's likely to do. I'll get to those details in a second. You'll know when to capitalize on it. But the most important thing is know when not to do it. And as a new trader, you probably are new and you feel like, I need to get out there and do this. And many of you probably forgot about the 5 handles. You haven't even become consistent with that part yet. And you just want to jump to the 30 handles and 50 handle runs, 100 handles, because you're hearing other people or showing examples of their trades. And now you think, well, why waste my time with these 5 handles? And let's just jump into the Grand Slam home runs. That's what every trader does when they come into this business. They jump too quickly and have no idea where they're going to grab onto it. There's nobody out there that's going to catch you if you don't get a grip on what the thing you're jumping up to reach for. You're trying to skip rungs in the ladder. That's dangerous. It's very, very dangerous. And when you fall at those heights, many people don't want to get back on the ladder, and they're scared to going through the process of going through it again the right way. They're upset with themselves. Now they're scared. They have fear. That's mental scar tissue. You have to allow doing the right things to reward you. Going back to the analogy of, say you're going to be doing the funded account challenge stuff. Okay. So that's the pathway you chose. Let's assume for a moment you got a $150,000 quote unquote account from a funded account challenge company, whatever they are, whoever they are. And they allow you up to 15 contracts. You have to remember that they have a threshold that you're not supposed to lose this much before they stop you. Your goal should be, I'm never going to be stopped by them. Now, right away, some of you are going to be pissing them out and saying, well, I can't make any money then. Well, you can't make any money if you blow the account either, but you will be spending more money to restart it. So what is it you want to be doing? Do you want to be resetting and paying for that bullshit? Or do you want to do it properly, trade with one fucking contract? One. Just because they say you can do 15, just because you see somebody else, me, anyone else out there trading with more than one contract, doesn't mean that that's what you should be doing, especially if you're new. I took a live account over at TD Ameritrade, which is a shitty ass fucking broker. They put $200,000 in my account one day that I didn't earn. It's all recorded. I went day by day, showing my account statements, day by day, the winners and the losers. It's on my YouTube channel. I think the playlist is first year trading results, like expectations, what you should expect. One contract made 100% in 5 weeks. Took 25,000 to 50,000 with a lot of losing trades and a lot of drawdown to be able to show traders in my private mentorship how to get out of that. With one contract, take one contract and make $25,000 a month. Are you fucking making $25,000 right now at your job? The Mickey Mouse shit you're trying to do what you're trading now, over leveraging and how many times have you tried to do the funded account? How many times have you passed? How many times have you passed it and fucking blown it? Once you get there, you're at the dance, but you left your dancing shoes home and you blow it because you're not ready. You are not ready. Just like this stage in your trading, you'll be content in the beginning with 5 handles, 10 handles, 20 handles, and consistent. And then that wild hair gets up your ass like everybody has it happen. It happens to every one of us. And you want to be a big leaguer and you want to go for that big grand slam. Yes, you can do it. Yes, you can be a Babe Ruth, but you can't be a Babe Ruth every fucking day. You can't. It's Murphy's Law. You know, you're the human element that you're bringing into this, which is what everybody does. As ICT, I do that too. Sometimes I get out sooner than I want. Sometimes I don't take enough off where I should have. It happens. You overthink it. You try to finesse it. It is what it is. Rules are there to guide you. So the rules for you to be able to do this is start with one contract. When you get funded, I don't give a shit what company it is, who's doing what. I don't give a flying fuck who is doing what. Do not try to emulate anyone. And I'm at the top of the fucking list. Don't try to do that. because you don't know where your sweet spot is. What does that mean? You see me doing, when I do on pyramiding, I'll go in, I'll take 6 contracts as my first initial entry. And then my second partial, pyramiding in a larger position, will be 3 contracts. And then my third will be 1 contract. So what I'm doing is I'm scaling in, but I'm really showing traders how to do 3 entries and not need to be the best one. There isn't just one entry. There's lots of entries. But I'm showing you how to scale into a trade with 10 contracts. That's my comfort zone right now, based on the volatility in the marketplace and how it's been behaving. It's been higher than that, and it's been lower than that, depending upon how fast the market's moving. It doesn't mean that that's what you should be doing. Your comfort level might end up becoming just 3 contracts. And that's nothing to be concerned about or ashamed of. Don't think of it like it's a dick measuring contest, okay? That's why ladies are better than fucking men when it comes to trading, because they're not out there trying to scale up and say, look, my cock's larger than yours. I'm trading with 30 contracts, bitch. What's up? That's not how it works. Because really, you can pull out that 30 contract trade. But the whole time, you're shitting bricks. They don't see your face. They don't see your shit and your palms sweating the whole time. You're thinking, man, if this blows up, I'm going to be so embarrassed. I'm never going to show this result. This is the trade. I really didn't trade that day. You don't know. Only what people show you. So don't try to emulate anybody. Start with 1 contract and then work up to 2 and then work up to 3. And if you feel uncomfortable, go back down. Not 1 down, go all the way back to 1 and graduate back up again and see if that same thing happens when you go back to 3 contracts. When you want to start hitting these grand slam home runs, you don't go into it with 1 or 2 contracts, 5 contracts, 8 contracts, 15 contracts. And then now I want to do 15 contracts and try to catch 100 handles. That doesn't work. Because it's too big of a leap forward. You haven't conditioned yourself to find out even if that's a realistic leverage for you. You are the trader. You can't emulate and find comfort pressing yourself into the mold and image of somebody else doing it. Me or anyone else. So you have to, number 1, know where the higher time frame draw on liquidity is. That means there's room for these big runs. It may not be 100 handles you're reaching for. It may be 30, it may be 50. But those only exist in the realm of possibility based on what the market structure is showing right now and what has it done. Is there an impact news driver that's coming out, or are they behind you? You're later in the week, like today. We had a big gap down, an opening range gap that was really, really low. And sometimes it's not reasonable to go short when it's like that. I went short today and I was going for it. And I went into both of them just to show you that you can read it real time. And if it doesn't go down there, I'll see it. And you watched it happen. I took a partial almost at the low end of NASDAQ. And then I took 50% of the remaining portion off before it came back and knocked my stop off. That was still in profit. That's like 70 plus handles on that move.